MiFID II is not about change purely for the sake of change. It represents protection of the end investor. Markets work best when they are liquid, when they are transparent, and when participants are operating under an umbrella of trust. OTC market trading is essentially decentralized trading, which takes place directly between participants outside of the centralized exchange. The legitimate market purpose of OTC trading is for large trades, i.e. where there's significant potential for market impact, technical trading, where there is no price formation associated with the trade, or the instance where intermediaries are committing capital directly to end investors. In OTC trading markets, we see a diverse range of trades conducted away from the central marketplace in instances where the protection of those orders for reasons such as market impact are really not required. The gaps in the current legislation that are allowing this to happen are twofold. Firstly, we don't have an accepted definition for transactions that are permitted to take advantage of the OTC requirements of MiFID. And secondly, we don't have a European-wide regulatory framework governing the distribution and content of post-trade data. We think there are legitimate categories of transaction that must receive the pre-trade transparency waiver treatment. Large transactions in particular, those that need to be handled sensitively to avoid undue and unnecessary market impact. But what we've seen in recent years, business at the lower end of the scale, €1,000, €2,000, taking advantage of the OTC capabilities of being traded outside of the public and transparent marketplaces, and we don't think that's in the interests of the end investor. The answer to that question lies in trust. Trust is incredibly important in markets. And transparency is incredibly important in creating a trusted environment. So transactions and orders that contribute to price formation, in our opinion, must be made transparent to the end investor by way of public markets. MiFID liberalised so many parts of our industry, which is exceptionally positive, and it brought competition. But there have been a few consequences that we need to address. One of those is the fragmentation of data that is reported to the marketplace after a trade takes place. There are many environments across Europe with differing standards and different consistency in application of rules, and we've ended up with a real mess. It's very difficult for the end investor to understand and interpret what's been going on in the marketplace. We at NYSE Euronext are fully committed to working with all stakeholders in Europe to create legislation for the benefit of the end investor.